We have to acknowledge that the cyber insurance, though young, has grown very rapidly, both in terms of size and in scope of coverage. But a key challenge will be attracting additional reinsurance capacity. So we need to expand the access to deeper pockets of capital, including from financial markets. More recently, we've seen a flurry of activity in the space, including the first fully collateralized and fully securitized cyber catastrophe bonds. We see the development of cyber ILS more on a gradual trajectory rather than one that's meant for liftoff. A key diagnostic of that is perhaps the cost of capital that's required to get the risk transfer to capital markets. That cost of capital is currently significantly north of where many sponsors would be comfortable in making that risk transfer. First, doubts about contract certainty. Varied event definitions, what perils are included, what damages may well be covered in the underlying cyber insurance policies. The second factor is very much thinking about the structure of the market, and in particular, the limited participation of investors in the transactions, the cyber ILS transactions we saw, and more generally, the illiquidity of ILS as an asset class. The final hurdle to overcome, and this perhaps might be the most structural, is that there remains caution amongst investors about how far cyber is a genuinely diversifying risk. First off, moves towards greater policy standardization in the insurance and reinsurance policies. We should move away from overly complex and legalese that deter potential investors who are not necessarily familiar with all of the reinsurance and insurance language. The second area where it might help improve the prospects for cyber risk transfer to capital markets is simply in the modelling and quantification of cyber risks. The third area where I think we can make progress within the cyber insurance space is very much thinking about whether we could develop the product further, the primary market, perhaps developing dedicated covers for particular cyber perils, or isolating or differentiating attritional loss exposure from catastrophic exposure. And in the reinsurance market, the development of more excess of loss type transactions rather than the proportional type structures that are often very popular in the reinsurance market currently.